Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very good day. And in today's markets, guys, the bulls continue their rally push forward, erasing pretty much all of the losses that we had over the month of August. Take a look right here. This is the start of the month of August. The Friday non-farm payrolls jobs report that really started the cascade to the downside, and the Black Monday sell-off that really finished it off. At one point in time, the S&P for the month of August was down almost 6%, and now we have largely erased all of those losses and even more. And same thing for the QQQ. The QQQ to start the month of August was down pretty much almost 8% top to bottom, and now largely retracing all of that as well. So very nice pushback by the bulls indeed. Now, today's price action was largely helped by the CPI inflation report that we got this morning that came in quite favorable. So in today's video, guys, a few things to cover together. Of course, we're going to go over that CPI report that we got early this morning and see what elements of inflation remain sticky and what elements of inflation are considerably trending to the downside, right? Then number two, we got another piece of fun news after the close today, and that has to do with 13F filings. 13F filings, guys, very simply is every single quarter, institutions and large hedge funds are required to disclose their purchases and sales of new or existing securities. And sometimes it can give us a little bit of an insight, especially looking into the new positions that some of these hedge funds and institutions open. Some of the headlines from those 13F filings had to be what Warren Buffett just bought. Take a look at this headline right here. Berkshire invests in Ulta Beauty and Heiko. So Ulta Beauty, one of the value names that's been getting destroyed over the past couple of months. And take a look. When that news came out after the close, guys, they are now up 14% in the after hours. Another name that got a little bit of love in the after hours as a result of those filings was Nike, almost up 3.3% in the after hours after Bill Ackman disclosing a stake in the company. So we're going to take a very brief look into this article, more specifically to what Warren Buffett chose to purchase and sell. So it should be quite an interesting one to go through together. Thereafter, guys, we're going to go through our major technical analysis rundown of our major stock market indexes, then take a look at our big tech names, see if there's still some deals to be had there, and lastly conclude with a glimpse into my portfolio to see the trades made today and the ones that I have remaining for the rest of the week. So a lot to cover today, guys. Let's jump right into it. SPY up about 0.32%, QQQ only up 0.03%, but the rotation across the entire market was very good. Take a look at the heat map right here. You will see that big tech as a whole, fairly mixed. You did have some downside by Google and Tesla. Google has really been plagued by a few negative headlines over the past couple of days, and we will take a look at those headlines when we cover Google's technical analysis at the last portion of the video. More specifically, though, it has to do with the Department of Justice ruling just a few short weeks ago that deemed Google's search business to be too much of a monopoly. And now, as of the last couple of days, they're even talking about breaking Google up as a company into different parts. This has not been attempted, guys, by the US government since they tried to do it with Microsoft and failed in the early 2000s. So we'll be going through a look on this and see the implications for Google when we cover them in the Google section of the video later on, right? So that's pretty much it for your big tech names. Semiconductors, very mixed on the day. The outperformance, however, did have to come from the bottom half of the market. Financials, very good day. Healthcare, also a quite decent day. And the bottom half of the market responding really well to that CPI report, especially your more interest rate sensitive sectors, right? Well, now we pretty much have certainty that the Federal Reserve is going to cut rates in September. So all of your interest rate sensitive stocks have performed quite well today after that CPI inflation report. Take a look at the one-day relative performance, guys. You will see that most of everything is in the green. To the downside, we have communication services, which was led by Google and Meta, of course, and then also basic materials and consumer discretionary, otherwise known as consumer cyclical. But the rest was really very nice performance. On the 1 week relative, we are now pretty much fully in the green after roughly our 6-7 days worth of bounce by your bulls. But on the 1 month relative, guys, you can see that there are still a bunch of sectors that are still in the red, and also a lot of other individual names as well. Solid companies, guys, that are still significantly down off of their all-time highs. So there is still a lot of market opportunities right now. I would not start to feel FOMO whatsoever at this point, and I hope you don't either. So before we get into more technical analysis, guys, let's take a brief look into that CPI report and gauge whether or not inflation is finally done for good. So let's take a look at the numbers here, guys. In terms of your CPI, the expectation was for 3% year over year. We actually came in lower than that at 2.9. Month over month was in line, 0.2 versus the 0.2 expected, and your core 3.2 expected, and we got 3.2. So really just your headline number coming in 0.1% lower than expected, but we'll take all we can get at this point. Was a fairly good report. Let's get into some of the numbers in the actual report. So annual inflation rate slows to 2.9% in July, the lowest since 2001. Where is the inflation still coming from, guys? Well, we know this by now on the channel. It's been the same thing for the last 5-6 months. A 0.4% increase in shelter costs was responsible for 90% of all items inflation increase. Food prices only climbing 0.2%, while energy was relatively flat. So once again, guys, housing and shelter, one of your major contributors to sticky inflation right now. Take a look. Here is your graph. You can see the pale blue dotted line is your core. That has been coming steadily down here since our peaks in late 2022. And your headline number as well, now finally under your 3% mark and steadily trending towards the Fed's 2% target. So looking very good all across the board. Take a look. This is your most recent reads expressed in a month over month comparison. So 0.2% is amongst the lowest on the spectrum here over the last couple of years. So we really have to be happy with that as a whole. Here's what one analyst had to say, and I tend to agree, which is why I highlighted it. So today's CPI print removes any lingering inflation obstacles that may have been preventing the Fed from starting the rate cutting cycle in September. Yet, the number also suggests limited urgency for a 50 basis point cut. Obviously, the Fed doesn't want to wait too long and keep interest rates too high, or they run the risk of crushing the jobs market and the economy in the process. Those have been the fears over the last couple of weeks that led to the entire market sell-off in the first place. Moving on, as inflation has eased, percolating concerns about a slowing labor market seemed to have raised the likelihood that the Fed will start cutting for the first time since the early days of the COVID crisis. So, let's get into a few more numbers here, guys, right? In terms of the Fed cut probabilities for September, well, now you will see we are now at 63% for a 0.25% interest rate cut in the month of September. The odds for a 50 basis point cut are at 37%. But you can see, guys, 100% probability that there will at least be some form of cut, whether that's a 0.25 or a 0.5 remains to be seen, but now 100% probabilities for that rate cut in September. So looking quite good across that front. Now, moving on to the actual inflation data, let's take a look at your overall chart. So you can see this is your headline inflation number now at 2.9%. And we can take a look at some of the items just to see what is sticky and what is not. Well, the first one obviously has to be shelter, right? Shelter is still very, very sticky, well above our headline number of 2.9. Shelter is still sitting at 5.1. So it has been coming down since last year, 2023, but still well above our headline number. And that is pretty much one of the major things that's preventing us really from trending hard towards the 2% mark. Now, if you want to take a look at something else, take a look at your goods. Right, so these are pretty much commodities, which otherwise known as goods. You can see minus 1.9%. Goods are now officially in deflationary territory, guys. You don't need to look any further than the earnings reports we've been getting from companies over the last 2 quarters. So over the last 6 months, all of them have noticed significant consumer spending slowdowns. And when you have consumer spending slowdowns, what do companies have to do to stimulate demand? They have to reduce prices. So that is what you're seeing, actual goods deflation right now. However, in services, guys, services less energy, you can see if we remove this shelter, services, this yellow line, still also above our headline number at about 4.9%. Now, obviously, housing services represent a good portion of this read right here, but services overall as a whole have been quite sticky. Now, moving on into the graph that I always like showing you guys every time we do one of these, where inflation is and isn't. So Yahoo does a very good job of tracking a basket of roughly 20 different goods and services, so we can determine whether or not those are good in relation to inflation or whether or not they're still problematic. Well, auto insurance has to be the biggest contributor right now to service inflation as a whole, other than shelter, still up 18.6% year over year. Rent and housing still netly above our headline number. We saw that already. This line doesn't have an item right here, but if we hover over it, that's actually restaurant meals. So those are still slightly high. Household energy, personal earnings, at least personal income earnings are above the rate of inflation, guys. So we are gaining purchasing power, but it is quite slow. At least we are not below inflation. That would be very, very bad. It would mean your paycheck is getting continuously eroded by inflation. Personal care, medical care, still slightly above. But look at all of these things that we actually need in everyday life that are now below. Education below, prescription drugs, alcohol, college tuition, recreation, groceries. That's a big one, right? Only 1.1%. So it's coming down, guys. It's getting better, right? Transportation, clothing, pet and pet products. This one right here is electronics, new vehicles, gasoline, hotel rooms, toys, airfare, right? All of this. So many items now in deflationary territory, or at least below our headline print. So very decent report as a whole, guys. I remain the same in terms of my stance on inflation. I do believe that inflation right now is largely dead. It is going away, and consumer discretionary spending being pulled back even more, guys. That is just contributing to it going away faster and faster. So inflation is probably not going to be a problem anymore. The problem, however, now relies in the fact of this following argument. Has Jerome Powell waited too long to cut interest rates? Has there already been too much damage to the jobs market and to the economy in the process? We do not have any conclusive data for that as of yet. Are there a few red flags? Are there a few cracks forming right now? Yes, but whether or not those cracks developed into a full-fledged economic slowdown and recession, that is still uncertain. People are still very much on the fence of whether or not we're getting a soft landing or a more hard landing. The odds are about a 75-25 right now. 75% of people believe soft landing and 25% of analysts believe for a hard landing. So still very, very mixed. We do not have any more data, which reiterates my points that I've been making for the past 2 weeks. The data points that will matter the most now are going to be jobs and the economy, and any piece of data that has direct influence from the consumer, such as tomorrow when we get retail sales, and on Friday, consumer sentiment. Those arguably will start moving the market more than these inflation reports because nobody's concerned about inflation anymore. So hopefully that makes sense. That's pretty much everything for your inflation recap. Now let's jump into a bit of fun things, right? So let's go over this article right here. Berkshire invests in Ulta Beauty, Heiko, as it retreats from Apple. So we obviously know that Warren Buffett sold a lot of his Apple position actually over the course of the last 2 quarters. He's actually trimmed it by pretty much almost 50%. Now it's still his largest holding, but he has been exiting the company over the past 6 months on a regular basis. Now, moving on further here, guys, let's jump into it right now. What did he add? What did he sell more than Apple? So Warren Buffett's Berkshire Hathaway acquired stakes in cosmetic store chain Ulta Beauty and aircraft parts maker Heiko. Heiko, if you guys don't know, Michael is actually the only person that's ever brought it up in the comment section. So thank you for pointing this one out to me, Michael. I didn't really follow this one much, but it's such a strong company, right? Extremely strong compounding stock right here. Very, very beautiful long-term chart. So I can't really blame Warren Buffett for investing in it. The fundamentals of this business are extremely, extremely solid. However, the valuation right now is a little bit rich. So this one's probably going to be a long-term investment for Warren Buffett, but can't say anything bad about the company at all, guys, other than the valuation. The fundamentals are so solid on this one. So we picked up that one as well. Berkshire owned about $266 million of Ulta Beauty. So fairly large stake for him. I mean, not in the grand scheme of the size of Berkshire, but still a decent starter position for him, and just about $185 million of Heiko. Now let's move into a bit more. So he's exited Snowflake as a whole position, right? Sales included a nearly $1 billion investment in cloud computing company Snowflake. Snowflake, guys, I've always had a problem with this company. They're doing tremendous things. Their product is very good and their business model is very good, but the valuation has always been garbage. It's always been way too high. Look, even at $114, we covered this one last earnings. even at 114 bucks, guys, the peg is a 5.17. This is a question of a stock that was just bid way too high in the pre-IPO segment right before going public back here in the height of the IPO and SPAC market back in 2020, right? So this one, fairly good sell from Warren Buffett, in my humble opinion. Even Palantir has much better valuations than them. And they also sold the complete remaining stake in Paramount Global. Paramount Global was one of the investments that Warren Buffett made that kind of confused me, as well as one down here, as well as Sirius as well. He added stakes in Sirius down here, but I just never understood these two investments from Warren Buffett. But I know that Warren Buffett, sometimes when he takes these bets, he does get very preferential treatment from the companies. Are they either in preferred shares or warrants or a combination of both, which makes his investment worthwhile. You can't expect Warren Buffett to go into the open market and acquire shares in the public market for some of these struggling companies, right? Usually he gets a lot better pricing and he doesn't get better pricing than the shares in the market, but he gets, warrants or preferred shares, which increases its ROI capacity, right? So other notable changes: he sold more than 3.8 billion in Bank of America and also reduced his stake in Capital One, Floor and Deco Holdings, Louisiana Pacific, the railroad, and T-Mobile, and added stakes in Chubb and Sirius XM. So those are just a few of the trades that Warren Buffett made over the past last quarter right there. So the most notable one, of course, being Ulta Beauty, and Ulta Beauty shares reacting beautifully from that news. Obviously, we don't have all of the data from the 13F filings, but I'll try my best here, guys, over the next week as more and more of those come out to get a better sense of what the best investments that people are making in terms of hedge funds and institutions. What are the companies that people are starting to buy that maybe haven't gotten a lot of love over the past couple of months or maybe even years, such as Ulta Beauty, right? We're going to try to find some hidden gems that maybe some of these super investors are investing in. So all of that out of the way, guys, let's jump right into our technical analysis portion of the video. And we're going to go through these quite quickly because nothing much has changed, right? So we knew that SPY was in the context of this big daily downtrend, and we were waiting for the size of the bounce to give us the best idea. Can the bulls have a chance at resetting the daily uptrend with a good bounce? Or will we bounce very shallow and maybe roll over? Well, now the size of the bounce, guys, is very significant, right? 80% bounce on the S&P 500, which leads me to believe that even though these markets can be very volatile as of lately, I truly do believe now the bulls have a great chance at, when this move tops out, resetting for a daily higher low and going for the daily trend change attempt. The size of the bounce really puts the bulls in full control right now. So it'll be all up to them once we do start rolling over here to set up for that daily higher low and go for the daily trend change. I am not chasing this market right here. There are still some individual names that are at good pricing right now. I'm going to wait for the pullback, and then we can play the pullback for that eventual second leg higher. But all in all, bulls looking extremely strong. And even on the weekly, guys, even in the absence of an actual daily uptrend set, we actually have a truly nice weekly bounce underway. The weekly bounce is all the way up to about 618. So even if the bulls were to lose the daily move like this and set up for a daily downtrend, we would still just at this point be looking perhaps for a weekly higher low and even reset the weekly uptrend. So tremendous progress made by the bulls. But as I said, I will be patient and I will be waiting for that eventual retest before moving higher. Moving on to QQQ right now. So QQQ also putting in a very decent sized bounce, similar to the SPY, right? So daily downtrend was clear as day. And now we were watching the size of the bounce. The size of the bounce looking extremely juicy right now. 80% bounce on the QQQ as well. But same thing, guys, for me to be taking a position in something like a TQQQ for like a swing trade or something like that, you have to wait for the daily higher low setup to then be able to take that trade, right? That is where the better risk reward is. So that's the type of trade that I'm willing to wait for. So the move down, if it does stop out right here, could maybe bring us down to the shallow 450s, right? 450, 445, because that is the area of prior resistance that should be now acting as support for the markets. So I would not be surprised if the bulls use this as a support zone before maybe giving us one leg higher. The resistance area is set put right now at about 475 on the Qs. Moving on to XLF financials. Also, another very nice bounce day for financials, looking very good, right? So after losing their daily trend change attempt by this flush right here, we were looking once again for the size of the bounce. And XLF Financials actually setting up the daily uptrend shift right now. So looking extremely strong on XLF. As I'll remind you, as soon as this move is topped out, we'll just be looking for a higher low. Anything at this point above 42, just going to be a higher low for further trend continuation. And now we're really in the best case scenario. We are back above our previous levels of all-time high resistances, well, prior all-time high resistance, right? Now above that and above all of your short-term moving averages as well. So could be acting as a nice area of confluence to maybe pull back and then go for another leg higher, attacking the all-time highs at about 44. I'll remind you, financials never lost the weekly uptrend in the sell-off of the last 2 weeks, setting the higher low perfectly right here, 40.7. They almost gave it all back, but now on their way to potentially moving this weekly uptrend higher. My favorite names in financials, guys, right? I'll say it once, I'll say it 1,000 times. Remain Visa and MasterCard, tremendous companies, extremely good profit margins. Monthly higher lows are being set for a potential monthly rally to begin. Probably closer to the rate cuts in September, right? Now, MasterCard as well, same thing. Monthly higher lows are set at MasterCard, looking to potentially gain the levels very shortly too. Those are still my two favorite names in financials. Moving on to healthcare right now. Healthcare up about 0.36%. Very nice move by healthcare, guys. Look at this, right? Daily downtrend into fully engulfing V-shaped recovery mode. Excessively nice move by the bulls right now and setting a new all-time high on healthcare. So healthcare bulls so strong. And I was saying it since all the way back here, guys. Healthcare is usually a very, very strong play, not only leading into rate cuts, but also into a recession narrative. They're very, very, very defensive for that. Weekly uptrend still clearly in motion. Weekly higher lows are set at 145. So everything is looking amazing for your healthcare bulls right now. As soon as this move is topped out, just looking for a daily higher low for some potential trend continuation. Where could we maybe set the daily higher low, guys? Well, this area of confluence seems to be a pretty adequate one for me. All of your previous candles clipping into this location right here, and you also have some moving average support. So I would not be surprised if we do pull back. Maybe we just tag this and move on to another leg higher and push this weekly uptrend even higher as well. So looking very strong on healthcare. Moving on to semiconductors right now. Semiconductors fairly mixed on the day, right? Only 0.08% to the upside, but there is still very good deals left in a lot of individual names. We'll go through this in a few minutes. So moving on to semiconductors, guys, right? Very nice daily uptrend still in motion right now. If we were to lose the daily uptrend, that would be with a loss of the hourly uptrend first, and then that would mean that our daily consolidation is underway. So we do have the daily uptrend right now. We're just going to be looking for a daily higher low. If we roll over from here, looking for a higher low, anything above 211, looking for that higher low for potential trend continuation. What I would like to see from the bulls at this point is get us above this red box, right? This big area of prior resistance, which is still current resistance for the markets. If we can really push above it and maybe into this area right here, 250 to about 255, that would maybe give us an opportunity to break out of it, retest it as support, and then just continue the daily rally higher, right? So looking very strong on semiconductors. I like their recovery so far, but still a lot of work to be left, right? A lot of work remaining for the bulls. Weekly downtrend eventually will have to be recaptured as well. That's why I would like to see one last push into this 250, 255 level, and then maybe reset the weekly trend from here into further upside later on in the year. So looking very, very strong on semiconductors in terms of the recovery. A few names that I still really like in the sector right now. ASML, guys. ASML still at very, very attractive pricing, right? This whole location right here, 850 all the way down to about 750, this $100 range, prior all-time highs. We see you tapped it now twice, possibly looking to move higher. Company has an absolute monopoly pretty much, so it is a sure bet from me. Another company that has sold off a lot recently that's finally making a little bit of a move to recovery is Micron. Micron is very good value down here, guys. 100 all the way down to about 90 bucks. Super good area for a little bit of a swing trade on Micron. But my swing trade on Micron is going fantastically. So anybody that bought the dip down here with me, congratulations to you guys as well. At 131, the peg was only a 0.41. So at 100, guys, it is even cheaper. Very, very solid name at a very steep discount as well. And one of the ones we cover on the channel a lot, right? AMD. AMD still significantly down from the highs earlier in July at only 140 bucks. Could be worth a little bit of a swing trade opportunity. And one of the last ones that just comes to mind, guys, is SMCI. Now, I don't hold this one as part of a long-term investing portfolio. I don't think they have any competitive advantage or any moat whatsoever, other than being popular right now and needing heavy investment right now from companies like NVIDIA, right? However, this one could be a very decent swing trade too. We are looking for the daily higher lows for a potential daily swing trade for a daily trend change, maybe bringing us back into the high 600s. So it could be some decent risk reward, guys. If we can maybe pick some lows on this, think maybe in the 530s, stops go below the lows right here, $50 worth of risk, and we're targeting pretty much over $100 of upside. So decent 2-to-1 trade on SMCI as well. Now, moving on down, let's move into the IWM Russell. So your small cap names, not really performing too well here today, guys, but it's normal, right? Recession narratives and landscape right now, your small caps are going to be fairly muted, as well as the entirety of the risk on trade as a whole. So they're really trying to make a move right here for the daily uptrend. They actually do have the daily uptrend in their grasp right now, but we are dealing with some overhead resistance, these two yellow lines, 210 down to about 208. This is going to be a very tough area for the bulls to break through. Hopefully they can get through it, guys. But if we don't and just roll over from here, you just need to understand, well, your weekly lower highs are set and may just be looking to revisit these lower levels right here, 197 and maybe even low as 190, 191. For the rest of myself, guys, I'm just not going to touch this trade at all. Too much uncertainty in the markets right now for me to be touching this one. In times of uncertainty, I usually stick with the highest quality names. I would only be interested if we can get a revisit of maybe the 190, 191. We'll keep an eye on how the bulls are progressing right now, but still so much work to do on the weekly if we want to get back up there. Barely a 35% bounce, guys, so it's not looking good for the momentum to the upside right now. Moving on to the Dow Jones lastly. So the Dow Jones pushing above one of our critical levels, guys. Prior all-time high resistance, now getting back above that now, and now back above all of our short-term moving averages as well. So the Dow Jones setting a beautiful daily uptrend in the past 2 weeks, looking very good, trying to recapture as much of that downside as possible. So now that we have the daily uptrend, we can assume that any pullback just going to be looking for a daily higher low. Anything above 39,250 is that higher low, looking for continuation of the uptrend, and our weekly bounce simply continues at this point, guys. The Dow Jones never lost the weekly uptrend as well, right? Weekly higher lows are set 38,500, well above the 38,000 level that we had back here in May. So looking very good for the continuation of the weekly uptrend. Dow Jones looking extremely, extremely strong right now. Nothing bad to say whatsoever. And lastly, your VIX, guys. The VIX acting like nothing even happened over the past 2 weeks, finally back down to about 16 from the highs of 65 on that Japan Black Monday day. So very nice motion to the downside, guys. I would be very hesitant to play the VIX in either direction right now. I think the move is largely concluded, and I think that if you're trying to go for the VIX calls, guys, there's just not enough economic data left in the week to really support a large move like that. Retail sales can be important. Michigan's consumer sentiment can be important. But for a big move in the VIX at this point, guys, you're going to really need a event like a jobs report or maybe some other economic data specifically, right, that shows that the economy is severely slowing down to get another fear spike in the VIX like that. So calls are out of the question, and even something like an inverse the VIX. So if you want to play the downside on the VIX, I mean, there's not that much room left. There's not that much meat left on the trade, right? So the VIX right now, a no trade from me. Now, moving on down the list, let's take a look at our big tech name, shall we? So moving on into Apple. Apple up about 0.2% on the day. This bounce on Apple is absolutely monstrous at this point, right? Almost a 100% retracement of the fear-based sell-off move. So at this point, at any point when this move does top out, guys, just keep an eye on the hourly trend, right? When they lose the hourly uptrend in a significant fashion, you know that your daily bounce is finished, and we will just be looking for a daily higher low for a potential daily uptrend continuation, right? Looking very solid on Apple, and now we are above this area of previous resistance, right? So this whole 219 down to about 215, above it nicely, so maybe the bulls can just pull into this area and give us another leg to the upside. On the downside, however, if we choose to roll over and these markets prove to be more weak than expected, well, we're just going to be setting up for the weekly lower high and then look to maybe revisit the lower portions of this trade, 210 down to about 200. This is the area that I'm looking to go shopping maybe for some Apple swing trades. I can't really touch it on here up here, guys. The valuation is much too expensive with revenue growth rates, which are much too weak to support that valuation. So I'm going to be a bit careful on Apple at this point, guys. I really need to see, even 210 is a little bit high, guys. I really want 207 down to about 195. That's the sweet pocket that I'm looking to make some trades on Apple in. But as of now, looking quite solid, guys. Even the bounce on the weekly is looking very strong, right? So 61.8% bounce, which does give the bulls a great chance at either a weekly uptrend recapture or at worst, maybe just a tightening range as the markets move through this uncertainty, right? So decent bounce on Apple so far. Congratulations to all the bulls. Now moving into AMD. So AMD finally breaking above that whole 137 area yesterday and really giving some legs to this daily uptrend, right? So the daily uptrend momentum still does continue. I know AMD gave back a few of its gains today. It hit as high as about 143, but still a decent day of upside momentum for AMD. Quick reminder, if ever the move tops out right here, we do have a lot of space. Anything above 128, just going to be looking for a daily higher low for continuation of the daily uptrend. I would like to see this daily uptrend continue into the 150, 155 zone, this big pocket of resistance. Why? Because now that we have the daily uptrend, we know that our weekly bounces are on the way. So in terms of the weekly bounces, if you want to see the bulls have a chance at reversing this into a new weekly uptrend, we need to at least get back 50% of the move on the daily uptrend. So that would require about that 155 level. That would be a 50% retracement and can set the bulls up nicely for some weekly uptrend reversion later on, maybe in the month of August or maybe early September as well. So I'm going to keep my eyes peeled for AMD, that's for sure, but I still love trading this one, guys. Over the next few weeks, I will be looking for short puts anywhere between 130 and 120, as low as we can get them, guys. Looking very good. As for now, I do have some call debit spreads targeting pretty much the 150 area by October, and those have been moving pretty well. I still do believe there's a decent trade opportunity for some call debit spreads moving into September and October as well. So they're still on the table, guys, right? We're really only back to the levels that we had prior to the massive drawdown back here. 140, 130 for AMD is still extremely attractive pricing. Moving into Amazon right now, Amazon down about 0.08%. They were actually up a lot higher during the day, 172, but chose to retrace a little bit in the later portion of the day. But that's okay. Just keep an eye on this hourly trend, guys. If we lose the hourly trend into an hourly downtrend, you know that your daily bounce is finished, and then we'll be looking out for a higher low for a potential daily uptrend shift. Keep an eye on the size of the bounce from Amazon so far, pretty much over 50%, arguably 55%, looking very decent. So the bulls definitely do have a chance at getting some daily uptrend recaptures going. So I will be waiting for the bounce, guys, because Amazon right now is in a little bit of a, it's in pretty much a middle point, right? We're really almost halfway to this big resistance area. So we can't really take a trade from here because there's not that much upside left in this trade potentially if we get rejected at these higher levels, right? But we're also not very close to the lows in order to get better areas of support to base some trades off of, as if we would have a retracement back down here, right? So that is why Apple is pretty much in the middle right now. So no trade from me. I will be waiting for the daily higher low attempt, because when we come down here, very easy for me to write short puts in this lower range right here. If you're a long-term investor, though, I still do believe Amazon, even at 170, guys, is an extremely attractive proposition. It is still down 15% from the all-time highs and an extremely strong company, right? Anytime you go back in the context of an overall bull market, if you can find Amazon down 15, 20%, it's usually always a good opportunity to add at least a few shares. Even if you're uncertain right now and want to wait for a more downside, guys, we're not sure if the downside is actually coming. So what the best we can do is dollar cost average. Throw in a few shares here, and if we revisit the lows, we throw in a few more. So Amazon looking very good, but I will be a bit patient on this one. Now moving into Google, give me a quick second. So Google, down about 2.35%. At one point this morning was down almost 3.5%. What has been going on with Google? So if you don't know, or if you did know, Google 2 weeks ago the Department of Justice won a landmark case against Google and ruled that its search business was essentially a monopoly for the following reasons, guys, right? Google has a partnership with Apple that costs them about $20 billion per year. The partnership entails that whenever you have a brand new Apple device, you get it out of the box. When you first turn it on and go onto Safari or another internet browser, your default search engine is going to be Google on Apple devices. Now, Google and Apple have had this partnership now for well over 10 years, and it never really has been questioned by law departments such as the Department of Justice, right? But now we've seen a lot of cases trying to crack down on big tech's monopolies of certain areas, and this was one. And the Department of Justice actually won that case. It's the first time that they've won a case against big tech in the last 10 to 15 years. So definitely a very important one. And that was 2 weeks ago. And Google's stock price after that news was a little bit unsettled. But now we have even more points right now. So let's look into this, right? Department of Justice mulls Google breakup push after landmark antitrust win. So now they're even pushing to break up Google into separate companies. The last time this was tried was with Microsoft in the early 2000s, claiming that it was a monopoly, and they tried to break up Microsoft. It didn't work back then, but we will see whether or not it's going to work now. Obviously, nobody knows, guys. This is entirely up to lawmakers. Now, Google obviously has extremely good lawyers, and they can push this case into the future for maybe a number of months and maybe possibly even a number of years. But it is on the table for Google right now. So here we go. A bid to break up Alphabet's Google is one of the options being considered by the Justice Department after a landmark court ruling found that the company monopolized the online search market, according to people with knowledge of the deliberations. The move would be Washington's first push to dismantle a company for illegal monopolization since unsuccessful efforts to break up Microsoft 2 decades ago. Less severe options include forcing Google to share more data with competitors and measures to prevent it from gaining an unfair advantage in AI products, said the people, who asked not to be identified discussing private conversations. Regardless, the government will likely seek a ban on the type of exclusive contracts that were at the center of its case against Google, the Google and Apple partnership contract. If the Justice Department pushes ahead with a breakup plan, the most likely units for divestment are the Android operating system and Google's web browser Chrome, said the people. Officials are also looking at trying to force a possible sale of AdWords, the platform the company uses to sell text advertising, one of the people said. So a lot going on there for Google, guys. Like I said, it is going to be a long time before we have a definitive answer on this, but it is still on the table right now. So short-term risks, not really, but medium to long term, very potentially, guys. But as Google shareholders, I do not believe that we need to be concerned about things like this, guys. If they break up Google into their respective parts, we will obviously be beneficiaries of the shares of those different parts. So it will not impact your investment into Google. You'll just have to own Google in several different parts, right? And then you can maybe choose which ones you want to keep, which ones you want to sell off, of course. But that is the fact of the matter. I am not selling any Google shares in anticipation of this ruling. So moving into the actual price action of Google, you can see Google already trying for the daily higher low attempt, right? So daily downtrend was clear as day. I was saying when this bounce is topped out, we will be looking for a daily higher low. Anything above 157, just looking for that daily higher low for further trend continuation to the upside, right? So now, from the bottom, Google trying to put in a hefty bounce, especially into the after hours. We will see, can they get this hourly uptrend going again and set the higher lows right here? Keep in mind, the size of the bounce on Google was weaker than a lot of other names. The size of the bounce on Google, only 50%. So weaker than the SPY, weaker than the QQQs as well, and weaker than a couple other companies such as Apple and Meta, right? So Google definitely not out of the woods just yet. There is a possibility that we just roll over to lower lows. In the event we do fulfill that prophecy and roll over to the lower lows, at least we're coming into a huge area of support, guys. 153 down to about 144, huge prior all-time high resistance, should be newfound support for the bulls, and a big congestion area just 2 quarterly earnings ago. So that would be a likely area where I would be adding some Google quite heavily, especially for some swing trades. Now, in terms of a long-term investment, I still love adding a bit of Google shares down here. No problem with that at all. But as of right now into tomorrow, guys, I will maybe be looking for next week for some short puts in the lower 154 down to about 150 location. Love the stock down there. So that is how I'm going to be trading it. Now, the bulls obviously have a chance at reverting into a daily uptrend. That would be the best case scenario, because then we can start reversing a lot of this weekly damage that's been done so far. You can see the weekly size of the bounce on Google, not very good so far. We would need to at least get up to 50% to get maybe a chance for a weekly uptrend shift. And that bounce is still a ways away. You need to get up at least to about 175 to give us the best chances of getting that weekly uptrend longer term time frame back. So I like Google down here a lot. Now, moving into Meta, sorry for that. So moving into Meta, guys, Meta down about 0.34%, but still, guys, we were anticipating that as of yesterday's trade. We are coming into a very large area of all-time high resistance. So in the event the bulls get a little bit tired here after pretty much 6-7 days of straight upside rally, you can see it on the shorter time frames, right? Your 4-hour is getting slightly overbought. The 1-hour has tapped into overbought conditions a few times over the past couple of days. So in the event the bulls cannot get it done and have to retrace a little bit, just understand they've created a ton of space off the lows, guys. Anything above 451, just looking for a daily higher low for potential further trend continuation, maybe a second attempt at the all-time highs. Where could we maybe come back into, guys? Well, this location right here. All of your moving averages are sitting there. We do have prior support back here. That is pretty much your 500, 495 level. And below that is the area that I want to buy Meta in or make swing trades. In the event Meta gives it all back and we go into further weekly consolidation into these levels, 481, 450, guys, that is where I've been buying some Meta shares over the last month, and is where I will continue to buy shares if we revisit those levels. All in all, looking very good. So the only swing trade opportunities I'm looking for on Meta is a retest of this area. At that point, I'll be writing some options down below here and maybe doing some call debit spreads for continuation, or the breakout retest trade, right? Trade number 2 is break out of the all-time highs, retest the all-time highs, and run. This retest area is going to provide us ample opportunities to trade as well. So just a few of the setups that I like on Meta. Now, moving into Microsoft. Microsoft finally coming alive today for some continuation here. So 0.69% to the upside. I love Microsoft down here, guys. The bounce on Microsoft has not been as much as on the SPY, on the QQQs, and it's one of the best companies in the world. I still think it's an amazing opportunity here at 416. That being said, daily downtrend was clear as day on Microsoft, and now the bulls have put in a fairly nice engulfing move. So the engulfing move at this point, guys, take a look at this, almost up to 75%. So looking extremely strong. If the bulls do choose to take a little bit of a breather and reset lower, we can now be expecting the most likely scenario to be a higher low for potential trend continuation. Now, if we do start pulling back in here, guys, this is the trade location. 405 down to about 390. This is where I'm going to be writing options, whether it's short puts or put credit spreads, because we are looking for the daily trend change attempt, right? That is also the area where I'll be looking to add some call debit spreads for some upside, maybe through the month of October. That being said, in terms of the weekly bounce, right? The weekly bounce is fairly good, but you can see the bulls still have a ton of work to do to get a sizable enough bounce for a weekly uptrend recapture, right? They would need to at least get up to about 50% retracement, which is about the 427 level. So if we can get a weekly bounce into there, it gives the bulls a very good chance at resetting this into a weekly uptrend, potentially into the month of September, and continuation higher in the month of October. So Microsoft looking very, very good as the size of the bounce right now. I'm just going to be a little bit more patient and start trading some if we do get that retest. I did trade a bunch of positions here that I've most recently closed, and now we're looking for the second attempt. Now, moving on further to Netflix. So Netflix up nicely today, 2.11%. Netflix is really one of the ones that have bounced the most since the start of the month of August sell-off, right? So now 100% plus engulfing move by Netflix, looking extremely good in terms of the price action. As soon as this move tops out, guys, we're going to be looking for setting up the daily higher low to get that daily trend change back to the bulls. And where could there be one likely area, guys, is this area back here, right? If we lose this move and consolidate for a little bit, we might be able to retest the 633 down to maybe 620, this little pocket right here. If we can do that, this is probably where I'll be looking to write some options and maybe even do some call debit spreads for the upside later in the month of October. On the weekly, guys, weekly's looking good. Obviously, Netflix lost the weekly uptrend back here with this flush. and now putting in a very sizable bounce to get it back, guys. This is over a 618 bounce on the weekly, looking very good either for the entire V-shaped recovery or the two-step weekly uptrend recovery process. Keep an eye on this area, guys. 630 down to about 610. That's going to be the likely area where I will be looking for further positions on Netflix. Moving into NVIDIA right now. NVIDIA also up 1.67% today, looking very strong on NVIDIA. Now, we are still battling with this area of resistance above us, 115 to 119, but we are almost above it right now. So NVIDIA in a gorgeous daily uptrend. In the event we get rejected from here tomorrow and cannot breach above, just going to be looking for a daily higher low, anything pretty much above 97, looking for that daily higher low, and then maybe get more momentum for a second attempt at smashing through this area. If we just continue smashing through this area tomorrow, guys, this could be another trade opportunity. Breakout, retest of the 119, 115, and maybe run into earnings. That could be a second trade opportunity on NVIDIA. Looking very healthy, however, in terms of the price action recovery since the early August dump. Now, moving in further, on the weekly downtrend was clear as day, and now we have a juicy weekly bounce size attempt as well on the weekly. The weekly size bounce all the way up to about 618. So just like Netflix, guys, either NVIDIA has it in it to do the entire V-shaped recovery, and or they can pull the two-step recovery process because then now they've created a ton of space off the lows. Personally, myself, I will be waiting for maybe a little bit of a retest down here. If we can start retesting maybe 109, 108, that would maybe provide some opportunities to write some short puts. 104 down to about 95, looking for that weekly uptrend recapture. So I'm being patient with this one, guys. I've played NVIDIA a bunch of times over the past 2 weeks in this lower area, made some decent profits on it, not looking to give any of it back by chasing it. So I will be patient for my retest. If it doesn't come, it doesn't come, but I'm not going to be chasing in this market right now. Moving into Tesla. Tesla down about 3.10%. Not the best day for them, erasing almost all of yesterday's gains, unfortunately. And just goes to show, guys, Tesla is in a really tough market environment right now, especially with recession headlines hitting the news every single day, right? So daily downtrend right now. They now started a daily uptrend, but you can see we're starting to give a little bit of that back, right? So they do still hold the daily uptrend right now. We are looking for a daily higher low, anything above 191, looking for that daily higher low for possible trend continuation, guys. The next level of which would be maybe approaching the 216 up to about 220 levels. Now, in terms of the weekly momentum on Tesla, guys, is for all intents and purposes just dead, right? They don't really have any catalyst before the October robo-taxi meeting, so we'll keep a close eye on this one. But I do maintain, guys, if we lose this daily uptrend, right, and come lower and possibly even sacrifice the weekly uptrend and roll over into weekly downtrend, I am only going to be playing this stock if I can get some pricing below 170. 170 down to 150 on the short puts or on put credit spreads, or an area to load up some call debit spread, or some call debit spreads, right? This is the only area that I'd be willing to trade Tesla right now. I do not want it any higher than right now because there's just no positive short-term catalyst for the company right now, other than rate cuts in September, which is still roughly a month away, and their October robo-taxi event, right? So I'll be waiting for pricing to come to me. If it doesn't, no problem at all. But as of now, guys, we're really just stuck in this range of accumulation, right? 200 down to about 180, very nasty range for the company. Moving on to Palantir. Palantir pushing further above, guys. This is starting to be one of our best case scenarios for Palantir. What we were on the watch for, guys, is if ever Palantir could not break too much above the huge area of resistance, right? $30, $29 range of resistance, 2020 and 2021. It was huge for that company back then. Now we have broken above it. So there were two possible trades. One was a retest below down into the 2750s, 27s for more momentum to break it even better. Or the second trade was getting some lift above that big area and then maybe pulling back as a retest and then run. So I like this one. I like this one a lot, guys. If we maybe get a retest in this location into the 29, 28, I will be making a swing trade attempt on the company for further upside, because then you have some levels to base your trades off of. If we come down and test the lower 28s, we can put a stop loss below here, 25.73. So we're risking about $2.50. But the upside at this point, if we can get in low 28s, the upside is maybe all the way up to about $31, $32 up here, right? So about a 2-to-1 risk to reward, looking like a great trade opportunity in my humble opinion. So that is what I'm going to be trying to do on Palantir. Bulls in full control right now. When this move tops out, just looking for a higher low, anything above 21, looking for that higher low for possible trend continuation. Looking very, very, very strong on Palantir as a whole right now. Congratulations to all the bulls that have been holding for a few years, such as myself. Now, moving on, guys, we are now, that's pretty much everything I had for you guys in terms of the stocks rundown. Now let's take a quick glimpse into my portfolio for a few trades made today. So guys, taking a look at the portfolio as well today, it was a very good day of trading as well. It's been a very good week as well. No losses to speak of whatsoever. Today's realized profit was just under $300, which is pretty much what we've been making all week so far. We've been making at least almost $300 every single day. So it's been very good, guys. Just very conservative, either earnings plays or wheel strategy plays as well. Few swing trades in shares in the mix, but largely just respecting our strategy of selling options premium. So before getting into the positions that we open, let's get into a few that we closed this morning, and you will see that this morning was a fairly good morning in terms of closing positions for a profit. So we closed the new holdings that we had leading into earnings yesterday for pretty much worthless. You can see that we picked up some short puts yesterday, right? We got 5 of these 11.5 puts for about $9 each. And then we also had one above here at about $20 for the $12 strike. Now, those were all closed today for virtually worthless because new beat their earnings. The $12 puts were closed for $2. Very nice. And also the 11.5s were closed for pretty much a penny each. So pretty much 95+% profit on those. Nothing bad to say. We also closed a Charles Schwab position. Charles Schwab was one that I got in pretty much yesterday. Just looking for a regular wheel trade. I like the premium on it, so that's why I took it. And you can see we got $27 for it just yesterday, and we were able to close that one today for pretty much 90% profit at just 3 cents. So looking very good there. And there was a few other trades closed. The Cardinal Health position, that was another earnings trade. We got that one for 40 bucks. Closed it for only $4 this morning, so another 90% profit trade. And that is pretty much all the ones that we did close. Actually, we closed Alimentation Couche-Tard, a Canadian company that also operates in the US. We had some very nice premium on that one. We took that one at the early portion of the week. This was also a 90% profit trade. And that's pretty much all the ones that we closed over the course of the day today. So very decent realized profits as a whole. I'm trying to see if I did close any shares. I don't think I closed any shares today. That was pretty much all of yesterday. So in terms of today, so what new positions do we have for the day today? Well, let's get into it right now. We have some more earnings plays that happened in the after hours. So a few of the ones here were ASTS. We actually took a little bit of a gamble on this one, went with the $13 puts for just 10 cents. We got 2 contracts, wanted to keep it light because this one, obviously, it's been a very hype and momentum play from the Wall Street Bets community, of course. But, you know, it is still a company that doesn't generate any revenue whatsoever at relatively high valuations right now. So we went with the $13 puts here, guys, way, way, way below the market. 37% below, giving ourselves a very large margin of error in the event that earnings were not received well. And you can see after the hours right now, the stock is pretty much flat. So those should pretty much be ending worthless tomorrow. So quick little $20 that we gain in profit right there, right? All these little trades that I do throughout the week, guys, they all add up to hundreds and possibly even thousands of dollars by the end of the week. That's why I take them, because they are virtually, for all intents and purposes, the least risky trades that we can put on. So ASTS, I like that one. We also went with some BABA earnings plays for tomorrow. So you went with the 71 puts for 21 cents. Got those on a BABA dip later in the afternoon. And we went with the $73 puts in the morning when BABA was already down. So $20 each for those. We'll see what happens with BABA. The expected move for BABA tomorrow is about 5-6%. So we went a little bit more than that. BABA closing right now, we should have a decent margin of error, guys. Just roughly about 8% to the downside, and to our last strike, just over 11%. So looking forward, even if I do get assigned BABA down here, guys, I probably will just keep it because it's at the lower end of our support, and I like this company in that level. Now, moving on further, we also have some Cisco puts that we wrote for the after hours earnings session today. Very, very conservative strikes with those as well. Cisco in the after hours, you can see right here, we went with the $40 puts, and that is pretty much a 10% sell-off from the close potentially. So the expected move on Cisco was, if I can just pull it up right now, let me just pull it up for you guys just so you guys can see the expected move, right? So this is how I choose my earnings plays, always close to 2 standard deviations away. This is not the correct move. It was about 4.5% in the after hours, guys. So I went roughly double that. We went with the $40 puts, which was pretty much just about 10%, right? All the way down there was about 11.5%. So we went very conservative. Cisco was in the lower area right here. $40 would put us right at the base of these supports right here. So whenever I can get 2 standard deviations with some decent premium into a big level of weekly support, I'll take that trade every single time. So these will pretty much end worthless tomorrow. So we'll collect all of that premium. That's pretty much everything right there, right? In terms of the rest of the wheel trades that we have going here for the week as well, guys, there's just a few, right? The CP, those should pretty much end worthless. Stock is netly above 75, so looking good on those. Trying to see if I have any more of those. Yeah, Dollar Tree, $86 puts. We're not really in jeopardy of being assigned at all either. Those are progressing nicely. I know it says 27 cents here that they're trading at, but in all reality, guys, they're about 15, 16 cents after the close. So we're already up about 50%. Just interactive brokers not getting the end of day pricing. Not a very liquid strike. So that's why. We still have the Elf Beauty 135 put that is currently trading at about 60 cents. We'll keep those also till Friday pretty much too. Elf Beauty really been struggling over the last couple of days, right? But now kind of trying to find a bottom right here. We were actually in profit in this contract. We could have closed it early on today for only $25. So pretty much over 66% profit, but I want to ride it into the end of the week and see what happens with that. Then of course, what else do we have in terms of new swing trades? I mean, the McKesson swing trade is still on. The Microsoft swing trade is still on as well. You have a few debit spreads here that are performing nicely. This Micron debit spread right now, it doesn't show it right here, but you can see the profit. We're already up pretty much 50+% on that one. Looking very good across those two contracts. Other notable trades for the day. I mean, this Nike call, we're already up on it, but we should be doing very well on it tomorrow with the open. This one is for October 18th, so I'll probably ride the momentum a little bit more on it. If I can get a 2x on this contract, that is probably where I'll stop it out. That might come when if Nike gets up to about maybe $83, $84, we should be able to get a 2x on this one. We bought this one when Nike was about $74, 74 and a half maybe. And then that's pretty much it for the trades that we put on here today, guys. The TLT positions and the bond positions, they're performing very, very well. We got a great level on those. And the SoFi and Oxy, these are also part of the wheel strategy. OXY, we should be good on those. The stock's trading around 57.50 right now, so should be able to ride these into Friday and collect all of the premium. And the SoFi $6.50 puts, they're working nicely as well, down to about 6 cents from our average cost of about 14, so looking very good as well. And lastly, Walmart. Took a trade on Walmart for their earnings as well. Got about 22 cents for their earnings, down at 62.5. So let's pull up Walmart right now. You'll notice that the expected move on Walmart, if I can pull it up, usually it only gives these wonky charts after an earnings move. So Walmart's chart should still be good. Yeah, it is still good. 5.5% expected move. So as you can see, me going all the way down to 62.5, that is almost a double, right? 9%, not quite 2 standard deviations, but almost, right? Very, very low area for Walmart. Close enough to the 200-day moving average and close enough to some form of weekly support, which is a bit lower down here at about the 62 down to about $60 level. So we're right above that, not by too much. We'll see how that one goes. Usually Walmart doesn't drop by that much, but of course, guys, we will see how that one goes. That's pretty much all the trades that I have remaining on over the course of the week. Still looking for a few little swing trades here and there for the 2 last days of trading. We'll just see how all of those play out. And as usual, I will keep you guys updated for any changes. So that's pretty much everything I had for today's video. Hopefully you guys enjoyed that. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We do these videos every Monday to Friday after the close. So hopefully I'll see you back in one in the future. And lastly, if you have any questions at all, guys, now is definitely the time, right? Any stock requests, any technical analysis requests, any options trades that you would like me to review for you, or possibly macro discussion around the recession, anything you guys want, leave it down below and I'll get back to you within the first 24 hours. So take care, guys. Have a great trading session tomorrow. I'll see you after the close, and peace.